everyone. Yeah, so yesterday we were looking at some charts, analyzing them using funds. And it's quite an effective system when you look at it and consider it for your areas of support and resistance. And yeah, so I'm making automated systems out of all those things. I think I spoke about it some time back, that automated systems don't just trade for you as you sleep and you just make money, but they can help you from some very basics, some very basic areas of these movements in the market. Yeah, sometimes they can just give you a warning, like let's say like signals. Yeah, like signals. The way you receive signals, sometimes you have an alarm on a certain group that every time you receive a signal from someone, it sort of alarms, and then you check it out and see if it's working out for you or not. But most of the time you just enter the signal anyway because you trust the source. Yeah, so in the same way, these automated systems, you put a system into it, a trading system or strategy, that every time, like we're looking at these divergence setups, every time you have upper lows, lower, okay, every time you have like lower highs on the price, and then you have higher highs on this other, on the RSI. So every time you have that, it can give you a signal that this has happened. So you might have these robots placed into about, let's say if you have 30 charts. Let's say this way it becomes very interesting. You have about 30 charts, and you have put this automated system in all of these 30 charts, and it's going to look for the higher lows and the lower lows in all of these 30 charts. But then you've put all these ones in a 4-hour time frame for all these charts. So you have you have these systems here looking for that particular setup in all those charts in the 4-hour time frame. Now there might be an opportunity in the 1-hour time frame, so you can place the same robots into a 1-hour time frame of all these 30 charts. Then you'll have about 60 charts opened, which are just 30 but split into 2 with these different time frames. So if the 4-hour and the 1-hour time frame are not enough, you can add them into the 30-minute time frame, and yeah, then you'll have about 90 charts there. Then you can add them into the 15-minute time frame. Then you'll have about 120 charts open. Then you can also add them into the 5-minute, charts, the time frames, and then you'll have about 150 charts open. Now, the ones with a smaller time frame, the 5 minutes, the 15 minutes, these ones will have some short-term profits. So those ones you'll be a bit, you'll be scalping, in those ones, and in the bigger time frames, the 4 hours, the 1 hour, the 30-minute will also fall within the scalping range. Yeah, so those ones will, you'll also be getting some long-term trades there. So every time you get an alert from a certain chart, like every time you open a trade on your MT4 platform, it makes that sound, that alert sound, that it's like it's like clapping wood, something like that. So now you can change the alert. Yeah, you can maybe make it a song or something a bit lengthy, and then you make your, you put your speakers on some, you put them on some high volume, so that every time it alerts, it's not that very short clap that is normally there, but it will be something longer, like a song. So you will have a song playing every time the robot opens a trade. Now there you will, yeah, even if you don't hear that first, the first time when it hits, you will get to know within the next 3 minutes that a trade is open. Then you go and check the trade, and you see that the robot has opened a trade, maybe in maybe GBP CHF. So what you do, you open up the GBP CHF, and you look at that chart. You just look at it in all the 4 time frames or the 5, and you will know that you just look at the setup within these time frames, and you will know that this trade opened in this time frame. Maybe it opened in a 15 minutes time frame. You'll just see the setup there because You won't see it in the other time frames because it wouldn't have happened yet. But then you'll see it in the 15-minute time frame or the 5-minute time frame. Yeah, and those are smaller time frames. It will be obviously more frequent. You'll frequently get trades from there because you have so many candlesticks that will be giving you that same repetitive pattern over a period of time. So every time it opens and you identify why it has opened, then you can take a decision to either open a trade there or close it. Yeah, so that will not be a robot that directly opens for you a trade, because you have to look at the situation where the trade has opened and you make some judgment that I think we're having a reversal or the trend is continuing. Then you'll either buy or sell on your real account. You can put that in a demo account where it will notify you that we have this setup taking place in this chart. So that's how robots can help from such a level where they just give you informative information, useful information, whereby you trust the system that this one is based on divergence. So you can have a system based on divergence. You can have another system based on the daily pivot points. In every, and this one for the daily pivot points, it's quite easy for every time frame because it will calculate based on the previous day's chart, the previous day's open, close, and high and low. So that will calculate for you the day's pivot points, and then you will have all those entries in every chart. And the good thing with it, even if you change the time frame, it doesn't really matter. So your entry points could be, maybe if you have pivot points there for today, and you have many areas of resistance, and price is above, it's clearly above the moving averages and it's moving upwards, then every time the price crosses a pivot point, that can be your cue to buy. Yeah. Then for the other charts which are selling, if you have price below the averages and you have those entry points, you have those pivot points, the support levels, every time price breaks one, it will alert you that in chart, in this chart here, price has broken below. Check it out, look at it and see if we are moving further, and then you can make your decision from there. Yeah, so that makes it a little bit easier. So these automated systems start all the way from there to a point of full automation, whereby you tell the robot that every time you see this pattern, it could be maybe we have double tops or you have double bottoms, and then we have a support there or a resistance. Yeah, so you might have double tops and then you have a support level, and then you tell the robot after these double tops are there, when price crosses this area of support, then sell. Yeah? And you might even tell the robot to sell for the number of pips that it takes to get to the top of one of those double tops, the higher one, so you can even go halfway that distance in your pips. So if the previous high point was about maybe 50 pips, you might opt to take about 25 pips as you sell. So you tell the robot to just do that automatically. Yeah, not in 150 charts. Yeah, so just imagine the possibilities in 150 charts. You could probably have at least 5 trades every day. You might have 145 charts giving you nothing, but 5 charts will give you something every day. And if you make 25 pips off 5 charts every day, that's a very good profit. So I'm telling you about these robots which are based on real practical information that is there. I don't want to jump into some kind of personalized ways of analyzing these charts where I tell you that now we're going to get the bull's power, those indicators, and the bear's power. Then we'll add in the alligator and the ADX and whatever. Then we start mixing up some kind of strategy and put it into a robot. Yeah, we can do that as well, but I'm using examples of pivot points, of divergence, of price action, so that you see how you can relate it to something that is commonly known to everyone. So these other customized strategies, yeah, there will be time for them, but for now, it's good to concentrate more on what is popular, yeah, the popular information. Yeah, so yeah, some people have other trading systems. Like you count a certain number of candlesticks. Yeah, like someone told me that it's a popular strategy out there that in the 4-hour chart, if you have 3 candlesticks that are buying, after one that is selling, then the fourth one is automatically going to buy. Yeah, so yeah, so that is quite it's quite a simple strategy. Yeah? If you have 3 that are selling, let's say if the first one in the history is a bullish candle, then the 3 that follow are all bearish candles. Then the fourth candle will be another bearish candle, so you can sell after those 3. Yeah, that it is a pattern that keeps on happening. So I turned that pattern into a robot, just to test out in the 4-hour chart, and the results were quite, they were quite good. Not on every chart, but the results were very good actually. Some areas had too much points for profit, others had very little. But with a trailing stop, you can capture so many profits in a very big candlestick. So that was it was quite interesting. Yeah, and for robots, you have to run it for 1 whole year. You run it on the history of a chart that expands into a whole year, and yeah, it can be a bit disturbing. But yeah, and I think you have to get every chart. You start with the Euro USD, you load data of 1 entire year, so that you run your tests. Then if it doesn't work there, you have to go to GBP USD, and there are so many currency pairs. But on a good note, the index charts were quite good. The German 40, the Dow Jones, the Spain 35. They are quite good, all those index charts. And yeah, the system seems to work there very, very well. You always have those patterns working out. So now the only thing left to do is to sieve out where it is very, very unlikely, especially in the areas where there's a reversal. Yeah, normally when you're having a reversal and prices have been moving upwards, then they move downwards, in that area that that reversal is taking place, you normally have so many bullish signals that just they just fade away, as the prices turn to the other side. So yeah, that is one area to be very careful with, especially with automated systems. But so far, for all this time that I've been building these systems here, I found a way of maneuvering and avoiding those bad areas, those traps, those I think people call them bull traps and bear traps. Yeah, bull trap is where the price is moving upwards, then you enter your trade and then it goes against you. That is a bull trap. You had a very nice signal taking you up, then it was a trap. You are just trapped and then price moved against you and then you lost your money. And so that's a bull trap. The bear trap is exactly the opposite. So yeah, it's exactly the opposite. So there are so many bull traps and bear traps in all these charts. Avoiding those traps is very, very important. And the area where you normally get that is at a reversal. Another area where you get those traps are retracements. So many retracements give you what looks like a new trend. You're just having a retracement moving upwards and you think it's a new trend, and then you enter your trade and the price continues selling. So that happens a lot. Okay, so let's take a look at this this economic calendar and we look at today's events. Yeah. Today has quite a number of these fundamental events. So many are there today. Yeah, it's a very, very nice day to trade for the people who love news. So let's start with the very first ones at the top. In about 55 minutes, we're going to have some events. These ones are affecting France in Europe. So the affected currency is the euro, but they are coming from France in about 5 minutes. 55 minutes. So that the first one is the Market Manufacturing PMI. So these ones affecting France. They are medium impact events. Yeah, they are medium impact events, and yeah, but their impact is quite. It will be something. Yeah, I don't think it will really go away unnoticed. So market manufacturing PMI, it's going to be affecting France and the euro as a whole. So for these market events, if you have a figure above 50, it's very good for you. Yeah, so here for the first one, market manufacturing PMI, this one here is for March. Previous figure is 57.2. The consensus is 55, but it's still above 50, which means it's a good result. It may not be bearish for the euro. The next one is the market PMI composite, also for March. Previous figure is 55.5. The consensus is 54.3. Yeah, the consensus is still above 50, so this could also be positive for the euro. Then, the last one affecting France is the market services PMI. That one is also for March. Previous figure is 55.5. The consensus is 55. So there is a slight reduction in all of these three events, comparing them from the previous data to what is expected this time. A small reduction is expected, but the figures are still above 50, which is a very good sign for all these market events. Yeah. Then at 11:30, there is this one is affecting Germany, and German is now what you would call the capital of Europe. What you would call, something like that. So what affects German? It greatly affects Europe. So here there's the market manufacturing PMI, March. We have the one for France, medium impact. The one for German, heavy impact. So this one affecting German. Previous figure is 58.4. The consensus is 55.8. Yeah, so it's still above 50. It's still above 50, but it's still good. It's still good for German. Then the second one there is the market PMI composite. Previous figure is 55.6. The consensus is 53.7. Yeah, so this one is still positive for the euro. Yeah, so you might see these figures coming down, but it's still very, very important to know that a figure above 50 for these market events, it's very good for that currency. So here for the euro, it's quite good for them. Then still at 11:30, there's the market services PMI. Previous figure is 55.8. The consensus is 53.8, but still above 50, which is good for the euro. Yeah, so that one is, that one you should just have it in your mind that it's not always that when figures drop, things are bad for that currency. Yeah, if figures drop, but when they're still higher than a certain figure, things can still be good. Okay, now we have this one is an event you don't see all the time. This one is from the Swiss National Bank. The interest rate decision for Switzerland. So the previous figure is negative 0.75%, and the consensus is remaining the same, expected to remain at negative 0.75%. Now, for every interest rate decision that is announced by a national bank, there's always a monetary policy assessment and a report to show you exactly why the rates haven't changed or why they have changed. Now, normally if conditions are very bad in a country and rates don't change, it shows strength that you haven't had change of rate even when conditions are very bad. At the same time, if conditions are very, very good in a country and you don't have a change in rate, then that shows you that there's a weakness somewhere. Yeah, so that's where this report comes in handy. It explains to you why you don't have a change there, or why you have a negative change or a positive change, especially with an interest rate decision from a national bank. Okay, then yeah, there's still more events. So there is at midday, there are many events that are affecting the euro. This one is the euro as a whole. Let's just point out, okay, they're all market events. You have market manufacturing, market PMI composite, market services affecting the euro. The one with a high impact is the market PMI composite. Previous figure is 55.5 and the consensus is 53.9. But these figures are still above 50. You know, the same applies for Britain. You have these events affecting the pound sterling. There is this event, the market services PMI, affecting the pound sterling. So previous figure there is 60.5 and the consensus is 58. So here, all these events, they seem to be quite good for Europe and Britain. So keep that in mind. Yeah. Then at midday, there is a speech from the European Central Bank from one of the members. Is called Frank Elderson. So that speech has a medium impact there, but you know, the impact could be much greater than that. Yeah. Then today, again, for those who love news, there's another speech from President Zelensky of Ukraine. Yeah, full name is Volodymyr. Yeah, you have to say it with some Russian accent. Okay, Volodymyr Zelensky, the president of Ukraine, is going to speak today at 3 p.m. Yeah, that will be a very, very important speech to watch. You know, the man is going through so much, and the impact here is very high impact. So we're definitely going to have some impact at that time, at 3 p.m. And this will be affecting mostly Europe and Britain, the major currencies that we have on our pairs. You can also look at the Hungarian currency, you can look at the Polish currency, you can look at those very exotic charts and get some other kind of market impact there. And if it's positive on your side, you can make some good profit. Yeah, so that is a very important speech, not a very common one to have, but very interesting to have at the same time. Okay, so then at 3:30, there will be so many events affecting the US dollar. There are about 8 events, starting from continuing jobless claims, current accounts, and here's quarterly. Then there is durable goods orders affecting the US dollar. Yeah, so durable goods orders, this one measures the cost of orders received by manufacturers for durable goods. Yeah, which means goods planned to last for 3 years or more. Yeah, so yeah, you have cars, you have electrical appliances, whatever. So the durable goods orders, this one here, if it is okay, obviously a high reading is good for the US dollar. So here you have the previous figure as 1.6% and the consensus as negative 0.5%, which is very, very negative. So that is something to keep in mind. This is very bad for the US dollar. The next event is a non-defense capital goods orders with an exception of aircraft. So the previous figure is 0.9% and the expected figure is 0.5%. That is also, the expression is bad for the US dollar. Let's take a look at all of them. Durable goods orders with an exception of defense goods. This one as well, a low reading is bad. So the previous reading is 0.6%. It's expected to fall to 0%. That one is expected to be bad for the US dollar. Then durable goods orders with an exception of transportation. Same thing. A low reading is bad. So previous reading is 0.7%. The expected figure is 0.6%. That is bad for the US dollar. Initial jobless claims. This one here, previous figure is 214,000 and the consensus is 212. That one is good. Jobless claims reducing. Then jobless claims with a 4-week average. Previous figure is 223,000 and the consensus, now we have no consensus there. But for the US dollar, most of the events, especially the high impact events, they are not having a positive outlook for the US dollar. So at 330, you might have the US dollar going bearish. Okay, so I think, yeah, there are a few other events left today. Yeah, let's take a break right now. And when we return, we shall look at these other events. They are mostly medium impact events, but given what's going to take place today, the president of Ukraine is going to speak. So that is some big news. So given all that is taking place today, these other events will definitely have some significance, and they'll definitely have some good market impact, especially for the US dollar, which is most of what is left today. Yeah, so we're going to look at all these and a few charts after this break.